Hello, everyone. Yesterday in the market, we had predicted this. So I would mostly consider the market to be buy on dip market, and I would look for any retracement or weaker pullback to again add my position to look for the longs. And when will be the longs invalidation? If the market finds any short-term sellers again, and the market is giving a good retracement, again low to test this low, and if the market sustains in this low, then we are expecting another lower low. So market behaved exactly what we expected yesterday to do. And in the evening, the U session market went up vehemently, and we have got a good a breakout kind of scenario yesterday. But after that, what happened was a bit of a change that we would be looking at today. And what are the trade plans for today? As you can see, currently my challenge is going on to build a small capital of around 180 to grow as much as I can. And within one day, we were able to grow it to $540, as you can see. So currently my longs are running, and we would take a look at why we entered into longs and what are the current plans for today. So if you see, yesterday when the market has gone in the US session, it has got rejection from the exact high of day before yesterday high. If you can see, this was the day before, July 16th, day high, and we have got a rejection from the exact zone. So whenever the market gets a complete profile reversal, like a day before yesterday, it was a sell-off, and yesterday it was complete bought back. So whenever that kind of a scenario happens, it is always little tricky because we are getting a V-shaped recovery. So what we have to understand is how the recovery has happened. Was the recovery from the bottom? Was that very powerful from the expected buyer participants? And what about the rejection from the same exact high of day before yesterday? So if we are taking a look at the rejection, if we take a look at the order flow, we are seeing quite good orders. You can see, right? I know most of you are not equipped with the order flow. Here we can see the orders are quite high. So who are these participants? These participants are basically the responsive sellers. So in a market, we usually have two types of sellers or two types of buyers. One is responsive, and second one is initiative. Responsive sellers are, in general, they are a short-term traders who does not has any target to ride a position to 20% of the instrument, or to ride the position for 6 months or 8 months. Their target is just to capture a swing, or it can be capturing 1 or 2% of the instrument movement. So here what we are seeing is they are responsive sellers. They are not initiative sellers. Initiative sellers are those, they are long-term sellers. Their target is not, to ride a swing or anything. They keep averaging. Their positions would be running for months or quarters. So here whom we are seeing is responsive sellers. So how did we find whether they are responsive sellers? So these are the sellers who had responded when the market has got to this zone. We discussed yesterday in our video. Please go ahead and check that out. Here we have briefed about why the market has fallen. So these are the sellers who had taken advantage of the buyers who are not able to push the market even further. So seeing the inability of the buyers, they have jumped in. So that is why they are called as a responsive seller. They found a opportunity. They found a response to weaker buyers. So they are the ones who have jumped in. So these are the same sellers who are defending their positions. And after their position, we found a lower low creation. Here we can clearly see it has created a lower low. But are we confident about the responsive sellers move to test the lower low? We are not, because now the market is coming to the initiative participants. Yesterday in the video, we discussed about accumulation. So these are the buyers who have accumulated the position for long term. So definitely we are expecting a response from them. So this is where the market is going to test now. So why did we enter the longs? As you can see, when the market is coming down, this is not the particular behavior that the sellers should be exhibiting. Because when the market is creating a lower low, we are not finding any more sellers' confidence in any of this selling. Even though that we are seeing a lower low, there are no much positions happening, because these are responsive sellers. Their duty is to defend their positions at the top. These are the follow-up of the poor or intraday sellers. So they are not able to push the market down. You can see, right, after the breakout of the first support, they are already feeling exhausted. And where are they feeling exhausted? They are feeling exhausted near the positions of the long term initiative buyers. So on the way itself, they are already exhausted. So how can we expect them to continue the fall? So there is another scenario also. When would this longs that I'm currently having, when would that get invalidated? That will get invalidated when the market moves below this zone. For that, how will we find out the major defensive location of the previous day bias? For which I have used a indicator called fixed range volume profile, which is nothing but to find out the volume over a fixed period of time. If you take the indicator just a volume, you will get a volume for the complete period of time, right? But I don't want that. What we want to do is we want to see where the exact volume has been punched in the accumulation zones. That will give us a clear idea from where we can expect the rejection. So here we are finding we draw the when we draw the fixed range volume profile, we are finding the VPOC at the middle of the fixed range volume. So this is where we can expect the rejection from. So that is why I have taken a longs from here, and why we have kept the 4010 as a not invalidation. Invalidation would be only below 4010 if it starts sustaining below. If it starts sustaining below means what? The accumulation participants want the market to go even lower to have a better average buy order. So market will slip down even further, and that will be a win-win situation again for the long-term accumulated buyers. So there we will not be holding. Until then, we will be just averaging to take the market high to create a higher high. So my expectation is market would have to sustain here and the market would bounce back. This is what my current expectation. And below 4010, we are not going to hold the longs. We would be looking for shorts to which position, at least to create a lower low here below 395. Again, we will get a 300 pips movement there. So that is the current market prediction for today. And let's see how it roll out. I'll keep the updation on my running trades, and I'll see you all in the next video. Thank you. If you are new here, please keep subscribing. Thank you so much.